Hi, this is Vijay Bamvani and I welcome you to the second edition of the free weekend newsletter Mort Musings in video format. Now, basically what we are going to discuss now is a market roundup, the bond market indications, what the Dixie tells us, the Nifty 50, the Bank Nifty, and some stock leads that I have shortlisted for you. Here goes. We first start with a roundup. Last week in this video, I said that we have some major positives lined up for India, and those were falling crude oil prices and natural gas prices along with a strengthening rupee. Now, being an import dependent nation, India basically 2/3 of its entire imports are actually fossil fuels, and like I reminded you, fossil fuels are multiplier commodities. Prices of crude and gas go up. Everything from your fruits, vegetables, pulses, grains, medicines, clothing, etc. all go up substantially. So first of all, crude and gas were subdued till the first half of the week, and the rupee strengthened against the dollar. So whatever we import was actually more cost effective in terms of landed price falling to the extent of the strength in the rupee. Now, what you see on your screen now is a market roundup. The Nifty gained 4.36% on a week-on-week basis. The Bank Nifty outperformed the Nifty 50 by gaining 6.34% on a week-on-week basis. Gold went up 0.49% on a week-on-week basis. Silver on the MCX outperformed gold by rising 2.84% on a week-on-week basis. Oil went up 4.34% on a week-on-week basis. This was basically because Hurricane Delta has made a landfall in Louisiana and created havoc. Coming in the wake of Hurricane Laura, which hit the same areas a couple of weeks ago, this was expected to drive up prices of fossil fuels, that is natural gas and crude oil, temporarily, because 17% of US output of crude is from the Gulf area, and 5% of natural gas output is from the Gulf area again. So gas rose 10.5% on a week-on-week basis. The rupee strengthened to the extent of 0.13% versus the US dollar. The 10-year benchmark bond yield fell by 0.5% on a base effect basis. It closed at 5.95%. The market-wide position limits rose to 33.68%, which is a gain of 12.19% on a week-on-week basis, as you can see on your chart here. And in terms of open interest, as you can see on the chart on your screen, traders prefer to hold and add on to their existing positions in the market, which is a sign of strength. They're basically pitching their tent, digging their heels into the ground and saying, we will not let go of your positions. In terms of volumes, the winner was clearly Bank Nifty, which saw a 20-day period high in terms of traded volumes, whereas the Nifty volumes were relatively dull, as you can see in the graphic on your screen. Now let's proceed to the bond market indications. As I said last week, bond markets are basically the fountainhead of money from where the source of money supply actually comes in. And last week, the RBI basically in its Monetary Policy Committee meeting announced that it would be keeping the interest rates, the repo rates, constant. So no change in upwards or downward direction. That basically triggered off buying in the bond market, and bond prices went up, thereby subduing yields, which fell to 5.95% compared to 5.98% last week. As a fallout, what happened was that a rally was triggered even in banking stocks. And the markets basically perceived it to be a positive indicator, and shorts were squeezed aggressively, which basically saw the bank Nifty gaining substantially. Also, the other gainers were interest rate sensitives, NBFCs, housing finance companies, etc. And I expect this spillover effect to last in the coming week also. Going to the US dollar index, the DXY. Last week I advocated levels between 95.30 on the upsides and 92.30 on the downside, which held. The rollercoaster ride of the US benchmark index continued, as you are seeing on your screen. Hurricane Delta made a landfall in Louisiana and aggravated the damage, and it is expected there is going to be a whole lot of insurance claims piling up in the US, which means there's going to be a drag on the system. Also, I advocated that Trump's corona infection, will not adversely impact the financial markets, which actually occurred. What did cause volatility was the issue of stimulus, the wrangling between the Democrats and the Republicans there. So the markets are more concerned with stimulus rather than Trump's health. So next week, I expect a range for the DXY to be between 94.45 on the upsides and 91.65 on the downside. And the days that you need to watch out for a higher degree of volatility on the DXY because of US specific news announcements will be 13th, 14th, 15th and 16th of October. And the economic data release schedule is on your screen right now as we speak. Now let's go to the bank Nifty. Now last week I advocated that bank Nifty would actually see higher volatility in relative terms as compared to the Nifty 50, and the market action actually vindicated that point of view. Now the range that I had advocated between 24,000 on the upside to 20,750 on the downside held perfectly. And in the previous week, in comparison, the bank Nifty was standing at number 4 in terms of the highest beta or the highest volatility counters on the NSE. But in the week gone by, it climbed in the rankings to number 2, which means the bank Nifty index has now become even more volatile, which means that traders are going to find it challenging to trade this index on a relative comparative basis on a week-on-week comparison. And this index basically rallied on all 5 trading sessions in the week, and it's currently trading very comfortably above its 25 period exponential moving average, as you can see on your screen. And this average is currently poised at 22,345 levels. Now, as long as this level is defended by the bulls, you can expect the bulls to stay in charge and have an upper hand in the markets. And as for the range in the coming week, I expect the bank Nifty to trade between 25,450 in the extreme bullish scenario and 22,250 in an extreme bearish scenario. Now, these are basically 2 ranges of the extreme points. It's not necessary that the market actually tests them or even stop there once it goes, but these are projected estimated ranges. Now, in terms of higher volatility expectation due to data release, the days to watch out for bank Nifty traders would be 12th, 14th, 15th and 16th of October due to India-specific news announcements, which you are seeing on your screen as we speak. Now, let's come to the Nifty 50. Now, last week I advocated a range of 11,875 on the upside and 10,900 on the downside. And unfortunately, the range on the upside was exceeded slightly because the Nifty 50 actually went up and crossed the 11,900 mark even on a closing basis. Now, the bulls were expected to retain their grip as long as the 11,291 level was defended, which they did. And in terms of volatility, this index also climbed. In the week prior, it was number 9 on the volatility list, but last week, which ended, it saw the ranking at number 6, which means volatility on the Nifty as well as the Bank Nifty have risen. It's become more of a challenge for traders, which means you actually need to trade on light exposure. Don't take extremely heavy concentrated positions. This index also, like the Bank Nifty, rose on all 5 trading sessions of the week, and it's comfortably above its 25 period moving average, which is now currently at 11,441. Now, as long as the bulls managed to retain the Nifty above the 11,441 levels, they are in charge, they are in command in the driver's seat, and the Nifty intraday high logged on Friday was the highest after 24th of February 2020. So the decline of March has completely been negated. The Nifty has had a very surprising, very powerful show in the last 5 months or so, and basically the bears have been seen getting squeezed. Now this bear squeeze might just extend itself, but frankly, in my humble opinion, this is a very, very challenging market. It's the kind of sentiment that I haven't seen for a long time. This kind of energy in the market, the impetus that it is showing, is unheard of. So in terms of price volatility and movements, you need to be extremely careful out there with your position sizing. And in terms of days to watch, 12th, 14th, 15th and 16th October remain the days to watch out for due to India-specific announcements. Now, the last segment of this newsletter, stocks to trade for high impetus and low impetus traders. Last week we discussed 5 stocks which were for high impetus traders, which means lower exposure, bigger price range, as compared to low impetus, which means bigger exposure but smaller price moves. Now the high beta, high impetus stocks in which you need to keep a low exposure but you can expect larger price moves due to the volatility inherent in these stocks. Number 1, as you can see on your screen, is Wipro. Number 2, HDFC Limited. Number 3, HDFC Bank. Number 4, Infosys. Number 5, Mindtree. Now come to low beta, low impetus stocks where your position size has to be bigger and the profit target needs to be smaller. It's being led by Ashok Leyland at number 1, as you can see on your screen. Number 2, Exide. Number 3, Colgate. Number 4, Larsen and Toubro. Number 5, Glenmark Pharma. So you can trade in either direction depending on which way your terminal screen tells you. I'm not telling you to go long or go short on these counters. I'm telling you to follow the computer trading terminal screen, the snap quote window and your volume weighted average price window. But position size will be determined by the beta, and therefore I've split this group into low beta and high beta stocks. Now, coming up on your screen is my contact coordinates. Do keep in touch. I keep posting updates on my social media pages, and feel free to connect with me and read all the updates Monday to Friday every evening. Vijay Bambwani signing off for now. If you liked what you saw in this video, feel free to click like on this video and join my YouTube channel if you haven't already. And in the comment section, do let me know what you think about this video. Bye-bye for now. Have a very profitable week ahead. Vijay Bambwani, thank you for watching.